Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two strong buy energy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks in the energy sector, specifically the midstream niche, that come in with a strong buy consensus from Wall Street analysts. We're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. Just before we get into that, this is a reminder that there are just a couple of days left on the TipRanks sale. Right now you can get 40% off our premium subscriptions. So if you've been wanting to unlock some great investment research tools, head on over to the TipRanks website now to take advantage of our great sale. Now let's jump right into our two strong buy energy stocks. First on the list today, we're taking a look at Kodiak Gas Services. Trading under the ticker KGS, they're currently priced at $29.80 per share. Year to date, they've climbed about 54.5%, and in the last 3 months are up nearly 8%. Kodiak Gas Services provides large-scale gas compression services on a contract basis. And they do this for field gathering, enhanced oil recovery, gas lift, and processing. The company has well over 4 million horsepower of operating equipment in its fleet and boasts that this fleet is the most energy efficient and newest in the industry. Kodiak can design, build, and commission compressor stations and other natural gas midstream infrastructure, as well as contract for operations and maintenance of customer-owned infrastructure and equipment. All of this makes Kodiak a leading provider of compression services in the U.S. energy industry. Kodiak is fairly new to the public market, having gone through their IPO a year ago this summer. And on August 12th, they came out with their Q2 earnings report. Now, while they did miss expectations, the company did post record financial results and increased their full-year outlook. Total revenues came in at $309.7 million, which grew over 52% year over year, and net income came in at $6.7 million. The company had record quarterly adjusted EBITDA of $154.3 million, and looking forward, they raised their full-year adjusted EBITDA guidance to $590 to $610 million, which was a $10 million increase to the low end of the range. Along with that, the company also declared a cash dividend of 41 cents, representing an 8% increase over the first quarter's dividend. And the Kodiak Gas Services stock is starting to gather some attention from Wall Street. Just yesterday, we had a 5-star analyst from Mizuho Securities initiate coverage on the stock with a buy rating. He said that they stand out in the growth trajectory and market positioning, exhibiting a clear path to medium-term growth with an estimated 8% EBITDA compound annual growth rate, backed by industry tailwinds and proactive capital allocation strategy. Their focus on aggressive expansion and a strong presence in the Permian Basin sets it apart from its peers. With 8 current analyst ratings, the stock does come in as a strong buy with 6 buy ratings and 2 holds. Analysts' average price target comes in at $32 per share, implying an upside potential of about 7.4% from current prices. Looking at those ratings down below, on the low end we do have a hold rating from Barclays with a downside of just over 2%, while our high-end price target is that recent buy from Mizuho at $36 for an upside potential of over 21%. And for our second strong buy energy stock, we're taking a look at Archrock. They trade under the ticker AROC, currently priced at $20.85. They've gained over 38% year to date, and in the last 3 months are up ever so slightly at 0.3%. Archrock is a pure-play midstream company focused on natural gas compression. They provide these services to customers in the oil and natural gas industry across the U.S. and also provides aftermarket services to customers who independently own their compression equipment. The Houston-based company boasts a market cap of nearly $3.6 billion and is a premier provider of compression services in the U.S. midstream sector. They use their own fleet of compression equipment to provide contracted natural gas compression services, and in addition, they provide methane reduction services, which is important as methane is a major byproduct of all segments of the natural gas industry. Their next earnings report is coming up at the end of October and follows their Q2 report in July, where they did have a bit of mixed results, with earnings falling slightly short and revenue being in line with estimates. They reported Q2 earnings per share of 22 cents, which did fall 3 cents short of expectations. Revenue came in at $270.5 million, which did grow over 9% year over year. The company saw adjusted EBITDA at $129.7 million, and they also declared a quarterly dividend that grew 6% compared to the second quarter last year. A 5-star analyst from JP Morgan recently initiated coverage on the stock. They said that Archrock is well situated to benefit from the current natural gas market dynamics and infrastructural demands. They recognized the strategic acquisition of TOPS, significantly bolstering their presence in the high-growth Permian Basin through their electric motor drive compression assets, and said that the move aligns with the broader industry trends towards electrification. Their positive outlook is also underpinned by Archrock's robust financials and growth trajectory, which suggests substantial value for shareholders. With 7 current analyst ratings, Archrock does come in as a unanimous strong buy. And the average price target of $23.83 implies an upside potential of over 14%. Looking at those ratings down below, our low-end price target is a buy here from RBC Capital with an upside of nearly 6%. We have several all at $24 for an upside of 15.5%, and our high-end here is at $25 for an upside of over 20%. So that is a quick look at 2 midstream energy companies, both coming in with a strong buy consensus from Wall Street. Let me know what you think of these companies in the comments down below. I always love hearing from you guys. And please keep in mind these videos are never a suggestion to buy or sell any specific stock. Please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.